Welcome. Today is April 20th, 2021. I'm Jeff Hughes, Chief Investment Officer at JWH Investment Partners and editor of Alpha Insights, and this is your Daily 5. So my first slide today actually reviews just what's happening in the S&P 500. What we can see in this slide is really the last year and about a month from the lows in March of 2020 and just evaluating the advance off of those lows. And what we can see is a pretty identifiable trend channel. And that channel has a generally upward sloping to the right bias to it all along the way. And so that's what we like to see. We call that an uptrend. And that gives us a lot of confidence that the market is in a sustainable bull market. A couple of things we wanted to highlight here were just levels of interest. As those who saw my last appearance on your Daily 5, you know that I'm bullish on the market. And there's a variety of reasons for that. First and foremost, the uptrend. Secondly, we have the ability to count some potential targets for the S&P based on its historic market action. And I've marked off a couple of levels, as I mentioned. First is the low back in March of 2020 at 2192. The second level I marked is the high in September of 2020 at 3588. The third level I marked was the low on October 30th of 2020 at 3233. Now, from those levels, we can actually get a very good approximation of where we think the market can go based on what technicians would refer to as an equal swings measure. And that measure is the distance between the 2192 low and the 3588 high achieved in September, forecasted off or measured off the October low of 3233. And using that measure, we come to a potential upside target of 4629. Now, the second way we can actually approximate the market is to take a look at the prior high back in February of 2020, and that was 3393. And that's represented by the horizontal line kind of cutting through the entire chart. That 3393 level was critical. Once we penetrated that level, definitively, which was really marked by the November 9th breakout on the Pfizer news, we're able to project a measured move higher, which really measures the distance between that high, 3393, and the March 2020 low of 2192, projected higher from that high of 3393. And we've used red arrows to kind of give you a sense of where that measured move would take us. It actually gets us to 4594. So we've got two really good technical measures that get us into the 4600 zone. About 4594 to 4629 are the exact numbers. And we like to use round handles just because the market tends to gravitate toward those century marks, if you will. So our target price based on those measures and several others is 4600 for the S&P 500. Now, if we take a look at the trend of the market, we've identified that trend channel, which is up and to the right. In addition to that, we have a positively sloped 50-day simple moving average. The market's trading well above that. And on top of that, we have a 20-day exponential moving average, which is actually trading on top of the 50-day simple day moving average. And so the market itself is actually trending north of those two moving averages, which themselves are trading or trending in the up and to the right direction. So we've got confidence that this uptrend can carry to our target price. Now, will there be consolidations along the way? Of course. Can we pick the exact timing of the next consolidation? Probably not. A 3 to 5% correction could hit us at any time. And so, we prepare ourselves by just identifying support levels that would give us reason to be concerned. The first support level that we've identified is 3967. It bisects the 50-day simple moving average, as well as a couple of prior highs or near highs, and also cuts across that rising lower boundary of the trend channel, kind of in that 39.60, 39.50 to 39.70 range. And so 39.67 is the level that we've highlighted. We're going to call it 39.50 because, again, the market likes round numbers. The next level that catches our attention is the 3,700 level. There's a couple of prior lows that come in at or around 3,700. The exact low that was achieved in late January of this year was actually 3694. But we're going to go with 3,700 as kind of being critical chart support. As long as the market's above that level, we're in an uptrend, and we're pretty confident that the market can achieve the targets that we've seen. Now, one point that I wanted to note here is that time is not a factor in this price projection exercise. So there's no definitive time limit or time constraints to be considered. If we just simply project the trend higher at its current trajectory, we can get to our level of around 4,600 by late summer, call it July to August, kind of that particular range. We'd actually go with a number of around mid-August as kind of being an idealized time horizon based on the current trajectory of the 20-day exponential moving average. So what gives us confidence in this view? That's what I want to do when I take a look at the next chart here, is talk about the quality of the market. So chart 2, if we could just page forward. So chart 2 basically gives us a view of breadth of the market participation. Now, the breadth of market participation is really the gauge of quality of a bull market. And what we're looking at here in the top frame is a history going back to really 20 years ago when they began keeping track of this data, of the percentage of S&P 500 stocks that are now trading above their 200-day moving average or their long-term trend. And what we saw over the weekend, or actually Friday, was a new record high. We closed yesterday at just below that. 96% of the stocks in the S&P 500 are actually trading above their 200-day moving average. Now, going back in the data series to its origins in late 2001, we see there were 2-3 other periods of time where we got very close to that. The first one was in late 2003. The second one was in late 2009. We again got that level and matched it in 2011. But what's important to understand about those two periods of time is 2003 marked the beginning of a 5-year cyclical bull market. 2009 marked the beginning of a 10-year secular bull market. So we believe that this quality of the bull market is very, very high right now because the breadth is at record levels. And we believe that that marks the beginning of something, not the end of something. Now, importantly, the bottom frame shows new highs in the S&P 500, and this is as of yesterday's close. And we see actually in a down tape yesterday, and really kind of a shaky tape today as well, we're showing new highs at around 70 or 14% of the S&P 500 constituents have made new all-time highs so far in the month of April. That's more than at any other month in the past 3 years. So when we think about the sustainability and the quality of this market, we have a high opinion of where we're going, and it gives us a lot of confidence. So how do we pick stocks in this environment? Well, let's look at the next chart. The next chart gives us a perspective on sector leadership. And what we like to do every week is review what sectors in the S&P 500 are leading and which are lagging. And the stocks that populate the sectors that are leading are stocks that could potentially be high relative strength contributors to a portfolio. And so that's where we want to drop our fishing line to identify the next opportunity in the market for fresh new money. So the chart we're looking at here measures sector performance 2 different ways. We look at it on an equal weight basis. So every stock in the sector has the exact same weight. And then we look at on the market cap weight basis. And on a cap weight basis, the super cap stocks like Apple and Amazon and Facebook and Google and ExxonMobil and Microsoft, they tend to dominate the impact of their particular sector. And so because their market cap weight is so significant in the sector, whatever they're doing, that's what the sector is doing for the most part. So ideally, we would like to see some sort of convergence between these two. We'd like to see strength across the average stock and strength of the sector on a cap weight basis. And when we look at all 11 GIC sectors, only one really stands out as both leading and leading with significant acceleration in the momentum of its leadership. And the way we measure this is we look at relative strength as a ratio looking over the past 30 weeks. And that 30-week relative strength is exceptionally high in industrials, both from a equal weight and a cap weight basis. Not only is it leading the S&P 500, but the momentum of its leadership is accelerated. And so we're seeing improvement in that leadership. And so with industrials leading the S&P both on an equal weight and cap weight basis, we think industrials makes an ideal pond to drop your fishing line in and see what we can catch. So let's take a closer look at the stocks, the constituents of this particular sector, and see what stands out. So in screening industrial stocks, there's 5 real criteria that stand out in our minds as being important. First of all, we want to own stocks that are making new 52-week highs. Why new 52-week highs? Well, typically, stocks that are making new highs are in an uptrend. And if they're making new 52-week highs, that means they've been in an uptrend for a while. And so we want sustained leadership from the stock itself in terms of its trend. We also want to see a sector that's leading performance. And so we would love to see a stock that's actually outperforming the sector itself. So if the sector's up 1.8%, for example, when we look at industrials over the last 3 weeks or so, we want to look at stocks that are trading that have actually appreciated more than that. And we'd like to see improvements in their relative strength and improvements or acceleration in that relative strength momentum. And finally, we'd like to see stocks that are breaking out of a consolidation so that we know that it's already taken its rest, it's recharged its batteries, and has the potential to move higher from that range. And at the same time, give us some sort of criteria to project upside from. So when we look at the stocks listed here, we've identified about, a dozen or so names within the industrials that are all accelerating in terms of their relative strength momentum, none of which are actually outperforming on a 30-week basis, but are all outperforming, or I should say, the majority of which are outperforming the industrials over the last 3 weeks or month to date, if you will. One of those names stands out to us, and that's Republic Services Group. And one of the things we like about it is it's not the best performer, okay? Best performers tend to have kind of moved too aggressively too fast and oftentimes need to take a break. It's the 5th best performer in the last 3 weeks, but it has very, very steep acceleration in its relative strength momentum. And we see a lot of improvement potential for this stock to be a leader. And so we want to take a look at the stock itself. So looking at the next slide, we can kind of take a look at how this stock has traded over the last 3 years on a weekly basis. So this is a weekly log scale chart of Republic Services. And we see that the stock made its high in, lo and behold, February of 2020, and experienced a torrid decline with the rest of the market as a result of COVID. And so it broke its uptrend, and it came down and it made a low around $65 or so. So from a high of around 100. So it lost about 35% of its value. Over the course of the last year, the stocks rallied back to that old high and broke out and actually made a new high but failed to sustain that new high and consolidated further, pulled back around 15% from that prior high, and has subsequently rallied back to that high and broken out again, made a new all-time high on Friday and another new all-time high today on a weekly basis. And what we see in the lower panel of this chart is that the stock is not just accelerating in terms of its relative strength, in other words, a big improvement, but the momentum of that relative strength is accelerating sharply higher. And so the combination of this new all-time high, the fact that the stock's resolved above what I would describe as a classic pattern base formation, the cup and handle variety. And it's got that improved quality of relative strength and accelerating momentum. It just checks all the boxes. And we believe if this bullish inflection above 104 is sustained, then that gives us the ability to project a measured move initially to about $119 a share based on the handle portion of the pattern, and then ultimately $134 a share based on the cup portion of the pattern. Now, we would advocate, adding this to a portfolio, particularly overweighting industrials and overweighting this stock within industrials. And we would use a stop loss below $99. We think that gives the stock a good 5-6%, which translates into about 3 average true ranges of its own volatility to prove itself. And if the stock can sustain this advance, can sustain this resolve, this resolution of the pattern, we think the stock can get to our initial target price relatively quickly and ultimately achieve our stretch target price. And so unless the stock closes on a weekly closing basis below 99, we want to continue to be long Republic Services Group. So that's how we would approach the market based on today's action. We remain bullish. We like industrials. We especially like the Public Services Group. If you'd like to learn more about me and the work that I'm doing, you can find me on my website, jwhinvestment.com. I'm also on Twitter under @alpha_insights. I'm on the Trade Exchange under Alpha Insights. Our research is available to institutions on Nucleus 195 under Alpha Insights. You can also find me on LinkedIn under Jeffrey W. Huge CMT, or best way to get a hold of me, send me an email. I'd be happy to touch base and let you know what I'm thinking. Thank you so much for taking the time to listen to our presentation today.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.